So thank you for coming in, and with respect to your time, we'll get things moving, and if people drift in afterwards, then that's great. So did anybody go to Barbie or Oppenheimer this weekend? Yeah, some good movies out there today, right now, and yes, I think that we all like to see a good movie. And what I want to talk to you about today too is getting somebody interested in a program. You've got to know something about it. If I want to get you interested in Barbie and I haven't seen it, it's not going to work. But if I want to interest you in that and I've seen it, I might be able to do it. So that's really important for you to learn something about the MCC program that's available here in Maricopa County now, and how it applies and what you would do. Now, I'm Murray Bass, and I'm with the Phoenix IDA, and along with Maricopa IDA, we are sponsors of the Home in 5 program. Home in 5 is connected up with Community Investment Corporation, with CIC, to allow to provide mortgage credit certificates to home buyers in Maricopa County. It can be used with a Home in 5 loan. It can be used completely standalone. All depends on the qualifying of your individual home buyer. That's it. And you're going to find out how little you have to do to get somebody started down the road to MCCs, which is what we call them usually MCCs. There's not a lot there for you to do work-wise, and you're going to hand it off. That's the good piece. So without much further ado, I'm going to introduce Patty in a moment, but also I'm going to ask any of you who are here, if you just pass your parking tickets down to this end, I'll come by and pick them up. We'll get them validated, passed back out. And it won't matter if you don't get the one you picked up or not. It's just a validation for being able to get out of the parking lot. So Patty Gonzalez is here from Community Investment Corporation, and she's going to tell you the things you need to know, take questions from you. And if you've got questions for me as well, I can answer those while you're here too. So thank you, Patty.
We also will catch Murray at the end, also make sure everybody's a participating lender in the Home in 5 program and the down payment assistance programs, because they'll be rolling out other home ownership programs also closer to the end of the year. So we are glad you guys are here and want to make sure you're currently enrolled in that particular product also. And Home in 5 is a loan product. The MCC again is a standalone, but you can combine them. And I appreciate, Murray and the city, the Phoenix and Maricopa IDA having us out here, because we are located in Tucson, but the program is statewide. So this is kind of our first step to let's meet people outside of Tucson. So this is exciting, and this is a nice room for me, and technology and everything's working great. So it's going well so far. So I appreciate you guys taking your time to be here. We're going to go pretty quick. Everything is in your guys's handouts. Also for the people on Zoom, this will be emailed to everybody that signed up, the recording, the PowerPoint, and any handouts that we'll be going over today. Okay, Carla. So a little bit about CIC. I think on the next one. So we're a financial empowerment nonprofit. Okay, so the important piece about this is we are a nonprofit. We are not lenders. We're not realtors. We do not sell property, anything like that. We don't compete in any way. Okay, so we are standalone. We don't refer your buyers to anybody else. We don't have preferred lenders, anything like that. Okay, we give the members of our community who are shut out of or left behind in the economy access to knowledge and financing that need to pursue new opportunities. Carlos. So this is a couple different programs that CIC does. Your Phoenix IDA has some similar products. So in housing, we do the MCC program and we do down payment assistance. So here in Maricopa County, you guys got Home in 5. state program has Home Plus, and Pima County, they have Pima Tucson Home Buyer Solutions. So all those programs function alike. And what we do is we wire the funds to the title companies when they're applying for down payment assistance. So we also work with the home program. And I'm not sure if you guys have home, but I know you guys have Wish down here in Maricopa County. So we're the fiscal agent, we're the funding sources when it comes to down payment assistance. We have entrepreneurship, so small business loan, BIPOC loan funds. And then we have education, who is Carla. He is joining me today. Appreciate you being here. She in the bond compliance program that we do. We have family school engagement and school lending. So this is a little bit that everything that CIC does. A little bit about myself, Patty Gonzalez, Director of Housing at CIC. I've actually been, the MCC program has been around since 1991. I've actually been administering it since 1995. Okay, so MCC is my baby, and it's just something that we've always done. CIC is the only way to get into the MCC program for the entire state of Arizona. Okay, so that's something that we have always administered. There's always been funds. Money's never gone missing or run out, like a lot of programs, the funds tend to run out. Currently, I actually have funding until the year 2026. So right now, there's plenty of funds to get your home buyers into the MCC program. I'm already sweating under this light. Okay, so a little bit about the MCC program. Okay, it allows your borrowers to claim a credit that reduces their federal tax liability, saving them money. So we'll talk a little bit more about taxes in a couple slides. They're issued by the Pima County IDA, and we're collaborating with the Phoenix and Maricopa IDA to allow the buyer to claim 40% of the interest they pay up to $2,000 every year. Okay, so every one of your buyers that has a mortgage writes their interest off as a deduction. Okay, that's a separate subject. This program is an actual tax credit that's good for the life of the loan. So your buyers will be seeing this $2,000 as long as they're in that mortgage. Okay, the certificate is actually good for 30 years. These credits can be claimed year after year as long as they live in the home and they have a mortgage. And if they do not have a tax liability, so for some reason, especially during COVID, we had people that were not filing tax returns, IRS allows this credit to be rolled over for 3 years. So this year in particular, I had buyers roll over 3 times. So they had a $6,000 credit and their new credit of $2,000 come in. So we have people that had an $8,000 tax credit. Okay, hi, come on in. There's a presentation here in a pin. And also refinancing is allowed. Okay, so, we're going to see what happens with these interest rates, but, a lot of your buyers will probably be refinancing at some point, and they do get to keep the certificate. They don't need to requalify. They work with CIC directly. We get some information on their new loan, and then we transfer the certificate to the new loan. Okay, so this is kind of a overview of how the program works. Most importantly, we need your home buyers to apply prior to closing. Okay, because we always get the question if can they get into it now or when they're refinancing. They have to apply prior to their purchase. If approved, there's a fee, there's a certificate that actually gets issued, and they get to claim it for 30 years. Okay, and we handle this annual renewal fee with your home buyer directly every January, making sure that they use the credit. We offer free tax preparation, so we'll work directly with them once they're in their home. So here's an example, and this is a really low loan amount, and I use this for math purposes. If you have a loan amount of $125,000 at 4% interest, this person's going to pay $5,000 in just interest alone. And we talk to your home buyers and let them know that $5,000 can be written off as a deduction. However, IRS gives us such a high standard deduction that nobody writes off their interest anymore. Okay, because for instance, a married couple this year, the standard deduction was, I believe, $28,000. So unless they itemize and have a bunch of things to write off, they're not writing off their interest as a deduction. The benefit of this program is an actual credit. So 40% of the interest they pay in this example, 40% of the $5,000 equals $2,000. Okay, so as long as your home buyer's loan amount is over 125 and over 4%, they're going to be capped because the tax credit is capped at $2,000. So they will be seeing $2,000 credit for the next, it's at least for the first 20 years when we show an itemized breakdown. Okay, Carla. So here's that breakdown. So when we sit down with your buyers, because tax credits are difficult to explain. And what we'll do is when we work with your home buyer in this example, we show them here, we have a loan amount of $275,000 at 5%. We show them, here's the interest you're going to be paying. And we explain to them, this is the part that we're talking about that's considered a deduction. Now, this credit allows you to claim 40% of that, but they're capped at 2,000. So in this example, you'll see on average, since the program just had its 30-year anniversary, on average, people are seeing $50,000 worth of credits if they're staying in their home. And we do have quite a bit of people. Over the life of the program, we've done about 9,000 certificates. 9,000 home buyers is how many people have gotten the credit. Okay, Carla. So the difference between your deductions and your credits, well, we talked a little bit about this, where the deduction reduces your taxable income, and we'll have a sample of a tax return, but people are not itemizing. Okay, they're taking the standard. So the credits actually end up being better because these are just like your child tax credits, earned income tax credits. There's a housing credit. This is considered a housing credit, but you get those solar credits. There's a lot of credits, but the benefit of this one is that it's good for 30 years. Okay. Okay, Carla. Now this is kind of small. I don't know if the people online can see that, but this is somebody this year in 23. This is a 22 sample of a tax return. This person's income, single, $66,000 was their wages. Here, we'll sit down with your buyer and actually show them on their tax returns. Here you'll see when we're talking about standard deduction, or if they're going to itemize and write off their tax return, write off their interest that they pay on their taxes. But you'll see here, the married couple was actually $25,900. So this particular person was single. So their write-off, their deduction is $12,950. So if they didn't pay more than almost $13,000 worth of interest, they're not gonna write off their interest paid as a deduction. So we explain that to your home buyers because even your tax preparers aren't familiar with the credit. And we also offer the free tax preparation because we wanna make sure they utilize the program. Because there's a lot of times that they just say, well, we're not putting your house on your taxes. They're referring to the deduction piece, not the actual credit. Okay, Carla. And then we record this presentation and we send it to the home buyers and say, hey, there's samples. Here's an example of where the credit's going to kick in. So based off that person's $66,000 income and their deductions, their taxable income is what they're taxing them on is on the 7,000. So IRS is saying, based off what you made, we're going to tax you on that amount. And what we want from you is $7,300. So that's on line 16. This particular person has an MCC. So on line 21 is where they plugged in the $2,000 and IRS is saying, okay, now we want from you $5,327. Most people are going to say, we get a refund already. Okay, but the credit probably isn't going to work for us. People get a refund because they have a lot of money taken out of their paychecks. Okay, even myself, that's my savings plan. I'd rather have given them extra than to owe, okay, when it's tax time. So typically people are going to get refunds anyway. So in this example, IRS is saying on line 24, we want $5,300, but this person had withheld from their taxes $6,162. So in this example, their refund was $835. Okay, now if they, in the later on, we'll show you an example. If this person didn't have the credit, they would actually owe IRS. Okay, all right, Carla. So we'll go as far as explaining to them what you got to do is you got to look for that letter that comes from your lender telling you how much interest you paid. So we instruct them, you're going to be getting this form from the 1098 telling you how much interest you paid. And then Carla, on the next slide, we'll send them the MCC. The MCC actually has a tax form because a lot of people have not heard of the program. They might think it's a scam, something that doesn't exist, but it's been around. It's just people aren't aware of it. So here's the actual tax credit, the MCC interest, the form that they need. We will mail this to your buyers every January, and we remind them that they have the certificate. And what they have to do is on line 1, plug in what your lender said you paid in interest, and then 40% of that. And again, they're capped at the $2,000. So here is where they're like, okay, your credit is good for $2,000, which is what works out to page 2 of their 1040. Hey, Carla. So here's the backside of the 8396 telling them how to claim the credit, how to plug it in. All right, Carla. And then here in this particular example, same person, but if they had not had the MCC credit, IRS is saying, okay, we want $7,300 from you. You had $6,000 taken out of your pay stubs. So you actually owe us 1,165. Okay, so that's where you'll see the credits come into play. And this is also where you see your child tax credits and all the other credits. It falls right in, and there's actual drop box when you're doing TurboTax, however it is you're filing your tax returns. It's an MCC, an actual tax credit. And they'll obtain that tax form, and then the information, the certificate we give you will actually have a certificate number when it was issued, everything they need to complete their tax returns. Okay, so before we move forward on this, does anybody have questions on tax returns, deductions versus credits? And again, we explained this, we work with your buyer to say on your tax return, once they see it on their tax return, it's like, okay, now we get it, it makes sense. Okay, Carla. All right. Okay, we'll go ahead and, no questions, anybody?
Does the form look like a W-2 or is it the actual tax?
It's an actual
that
tax form.
83?
Yeah, 8396, it's just like your 1040 Senecto.
The number is 8396.
Yes,
And those go mailed out.
every January, we mail it out, and with the instructions on, if you do it on TurboTax, this is where you're gonna find it. If you go to H&R Block, whatever it is, along with the video of where you're gonna find all this stuff. We try to make it as easy as possible.
Is it-
Do most tax preparers understand it?
No. So we even in our letters, there's a Q&A, have them call us. We have a lot of tax preparers call us, or we have them, they submit their tax returns. Can you take a look at it? Just to make sure it's done properly.
Do you usually get it out before January 31st, like that whole?
We have to, we're required. So yeah, it actually, they're scheduled to go out on the 8th of every January. Because we have so many in the program, so it's automated. And then now with technology, we have emails, we send out an email also. And text, this year actually we started with text, so we're moving forward on our technology. Okay, so we'll go ahead and start with the eligibility and how to apply and such for the MCC program. Okay, so the program, the geography, anywhere in the state. Okay, so when the program first kicked off in 91, it was statewide. We actually had an office not far from here. And so that was in the 90s. And then in the 2000s, we were just in Tucson. And then the program was only available in Pima County. And then it started going back out since 2020 or so. The local IDAs got back on board. And so we're now offering it statewide. Now there's something that we refer to as target areas. And you're going to be hearing this later on as lenders. Once the IDA start rolling out their other products, they're looking at rolling out products. Where target areas are going to kick in is target areas are what are considered census tracts. So each property, each area has a census tract. And there are certain census tracts that are considered target. The benefit of buying in a target area, the income limit, the purchase price limits are higher. And you're not required to be a first-time home buyer if you happen to be buying in those census tracts. CIC just developed this website this year. Actually, I think we finished it up on the target areas, color coding them for the entire state. So right now, this website is being used for multiple programs, but it was actually established for the MCC because the MCC has always used census tracts in target areas. So you'll see here, there's a section where it's like, I can put the address in, or you can put a certain block, intersection, or you'll see here the whole state. And then you can zoom in or zoom out, because you have a lot of people that like, okay, well, I don't meet the income limit for a non-target, but I do for a target area. So they can just be zooming in and looking at, this is the part of town. And then they put a link in there for people online. It's very, very helpful. Eugene put a link and he was big help. Actually, he's the one running this map. So thank you, Eugene, online. So it's something that it's very, very beneficial, especially when you're looking for someone that needs to buy in a particular part of town. And a lot of people think they're considered economically distressed, but they're actually everywhere. So it's not any particular part of town. At this point, they're kind of just scattered everywhere. So definitely, if you get a chance, take a look at our map. Now, here's a good card, that's fine. Here's our eligibility, okay? So the first requirement is that you gotta be a first-time home buyer. However, the rules for a first-time home buyer is saying you've not owned a home in the past 3 years which also means you may have owned a home, but if you've been renting for the last 3 years. So what they call ownership interest. So we have a lot of times where maybe there was a couple that owned a home together, they got separated, one moved out, and they have not lived in that house for the last 3 years. And because they've not lived in that house and the other person kept the home, then they don't have ownership interest because they've been renting for the last 3 years. Okay, so that's something, it's kind of a case by case. You'll definitely want to inquire. What we look at is, where have you been living for the last 3 years? This program collects 3 years of income tax returns. So we're looking at their tax returns, that'll tell us, were you living at that home? So that's something we use to guide us on the first time home buyer piece. Now, as long as you've not owned a home in the last 3 years, and then there's exceptions. If you're a veteran, okay, if you're a veteran, you do not have to be a first time home buyer. Or if you're buying in that targeted area, which are those census tracts, you do not have to be a first time buyer. Okay, now all types of homes. Okay, so every home, single family, manufactured, duplex. This particular program doesn't go beyond a duplex. Okay, so anything else is considered more of an investment property. And then all your loans, your FHA, your VAs, USDA conventional, we do not get into the closing process. We are not looking at your ratios, your interest rate, anything like that. Okay, we try to stay out of the closing process altogether, actually. So any kind of product is what we work with. Even if you're in the Home in 5, which is a loan product that has the down payment assistance program, can go in conjunction with that. There are household income and purchase price limits. So on the other corner there, you'll see it's based off the county. Okay, so for Maricopa and Pinal, they're this section here. So a family of 1 to 2, they cannot make more than $96,072. Family of 3 or more, they cannot make more than $110,483. Now, Murray mentioned this earlier with the Home in 5, they have just a chunk 132. What's your guys' income limit on your Home in 5?
It's 130 something now.
Yeah, 130. Yeah, so with Home in 5, that's their income limit. But if they were also going to get into this program, they would need to meet these ones. So the 96 and then the 110. But if they're buying in a target area, it's higher. So if they're 1 to 2, it's 112, and then 3 or more is 130. Okay, so they cannot earn more than that. Now, our purchase price, luckily, these just went up like 2 weeks ago, maybe a week ago. These particular ones you'll see here, which is very helpful for us because that was affecting us getting into Maricopa County because the limit was so low. If in Pima and Pinal and Maricopa, the non-target area is 540,422. And if they're buying in a target area, it's 660,515. Okay, so the purchase price cannot exceed that. Home in 5 does not have a purchase price limit.
That's correct.
Correct. Okay, yeah. So yeah, that's where we're, collaborating with the Maricopa and Phoenix IDA to try to get the word out. There's a lot of programs available, especially this one that's been around that people just don't know it exists. Okay, and then we have our website here, but in your handouts you'll see you'll have our information also. That's where you're going to find all the details, the map, the limits. Even when you click on the map itself, it'll tell you if it's non-target or target, and it'll even have these limits on there, so you don't have to go look for it somewhere else. Alrighty, and then so here is kind of the generic flyer that I tend to use. I tend to email this one out myself when I'm talking or educating people, or it depends on who my audience is. Okay, so because we try to get in front of home buyers, but we're not in front of home buyers. I mean, they're not looking for us or looking for you guys as lenders. You guys should be the first stop to get pre-qual, before getting with realtors and looking for homes and such. So when I'm talking to your home buyers, we will do lunch and learns if you guys are doing presentations. And later this month, there's the housing conference in Tucson. So we'll be there also to be talking about the program. But this is kind of the generic one where this is the first box where I'm talking to home buyers, because it's like, here's the interest, that's deduction, here's your credit, which works onto your credit for the next 30 years. Okay, so that's how that benefits. Now, when I'm talking to mortgage lenders or mortgage companies, what a lot of them don't realize is that this $2,000 credit, they can actually use as additional income. So you as a lender, that $2,000 should be divided by 12, that's $166.67 per month. Okay, so that's extra income that actually goes on your loan application. So on the other section where you would put child support, any other source of income, there's actual drop box or on the list called mortgage credit certificate. Okay, so right now, especially, this program is saving a ton of deals. Okay, because you might have had people that qualified at 6%, but those weeks where rates went up to 7.25 and they don't qualify anymore. Lender can plug in this 166 and they qualify again. Okay, so that's the benefit is, you know, not only to help save deals where we're talking to your home buyers, it's like, this is $2,000. Like, what can you do with this $2,000 every year once you're in your home? And for a lender, it's, you know, I qualified for 390, this 166 got me to the 400. You know, so in the market you're looking at. So it can do a lot of things to help benefit your lender with ratios and such. Now, when we're talking to your home buyers, on the tax return sample, we will see how much money they're having taken out of their pay stubs. And that's typically why they're getting a refund. And this credit, they're going to be getting a bigger refund. And so we will sit down with your home buyer and say, look, right here, we can tell how much money you're having taken out of your paychecks. Now, instead of getting, if you don't want it to see it in the form of a refund, you can go and adjust your withholdings. Okay, and we wouldn't expect you guys to ever have that conversation with them, but we show them, you know, yes, you're qualifying for more house because of this 166, so your payment's going to be higher. And so we'll show them, look, you're currently having all this taken out of your pay stubs and you're going to get a refund. You don't need to have as much money taken out of your pay stubs. Okay, which means your paycheck's going to be bigger, which is going to help you make that higher payment. Okay, so that's another benefit with the buyer. It's like, you know, you can make your take home more money with this credit, even though this credit technically kicks in on a tax return. Okay, and then we give an example on this $2,000 if they're paid bi-weekly. Tell your employer you want to take home $80 more a paycheck, you know, because you have the credit that's going to cover you on your taxes. And then we're talking to your realtors. We let them know this 166 means more home. You know, that's usually what the part they like to hear, you know, because it gets confusing when you're talking deductions, credits, withholdings, you know, it's like, this is too much, you know, it's overwhelming. So that's why we try to do these presentations and to get out to everyone in the housing community to explain the benefit. All righty, Carla. So why should you recommend MCC to borrowers? Okay, helps qualify for a higher loan amount or save the deals because of these rates going on right now. And then again, they can refinance and there is no penalty or anything for them refinancing. They get to keep it and it just transfers right over. And again, we don't requalify. We're not looking at income, anything like that. We feature you guys on social media channels. So what we do a lot right now, in particular in Tucson, is, and we did it here with the IDAs, is when we create an event, or if you guys are doing lunch and learns or some kind of housing fair, and we collaborate, you can create something and then we share it. You know, we share it, or if you do so many certificates, we feature people every month. Like this person did so many of them.
I need to be featured.
Yeah, we do TikToks. We have a great marketing team. Lisa's on here. She's put this all together. So yeah, like she's like, go out there and like, we're probably doing a dance in front of these balloons right now. Okay, we're gonna go viral. So yeah, you know, we're available to whatever you guys are looking to do. It's a unique opportunity to Arizona residents. Okay, not all states offer this. There's maybe 5 or 6 that currently offer it, other states. And the PIMA IDA is only a handful of counties that provide this actual credit. There's no class required. Okay, I get that asked often, and will not slow down the closing process. Okay, again, we try to stay out of the closing process altogether. The application, we can usually turn it around. We actually could turn it around the same day because I have staff that this is all they do. Okay, so if you say, I need this program to qualify, this deal is falling apart, you know, it's like, send us their loan application. If you have any other tax returns, we can issue something in the meantime while we get them qualified. But as soon as the application gets turned in, within an hour or two, an approval letter is what gets issued. And that's usually what your underwriters are looking for. Okay. Home buyers equals more, happy home buyers equal more referrals. because now they're homeowners and their tax preparer is saying, hey, how did you get into this program? Or, they're gonna remember you guys, the ones that, told them about the program. Because again, we don't get in front of them. CIC is not in front of home buyers. And then we do that often where your realtor is like, hey, there's this program that's gonna help you get that higher priced house. Okay, that's all they're gonna say. There's this program that lets you buy more house. Okay, and they're usually referring to the tax credit program. Okay, there's like, go find that $160 program. Okay, or go find those $2,000 a year. But this would be that one. Now, the best way, to share this with your home buyers, again, you'll find everything on our website. So there's a video. So what we just went through in this hour, it's in a 3-minute video. And then there's the income limit and the purchase price limits. The application, they can actually download it and upload it securely if they want to just do it all through the website. They can, if you refer them, if you say, my home buyer's interested in the program and you CC them, there's a script that goes out that says, your lender, so-and-so referred you to the program. Here's a video on how to complete this application. Here's a video on what this program is. Here's the application. And here's Calendly. We use Calendly. They can schedule an appointment if they want to do something on the phone, if they want to do Teams, Zoom, come in person, however, or if they just take the application, fill it out, email it back to us, upload it on our website. People take pictures and text it to us. Whatever it takes. Okay, we will make it work. And then they can contact any of our staff. We have 2 bilingual staff. There's 5 of us that have access just to the MCC program. And the MCC, I think it's in the next one, Carla. This is us. So myself and Mario, we speak Spanish. We're in the office. Okay, so we're there. So we have people walk in. Again, we're in Tucson, but we're looking to expand if we get enough. Carla's here. So, if we get to the point where we find her somewhere to go hang out and take applications all day, things like that is what we're looking to do. We have the website. It has its own email, okay, mcc@cic, and then its own phone number. Okay, so somebody is answering those calls. Okay, Carla, I think that's it. Come on, we're getting close to the end. Yes, so thank you for your time. I know that was fast, but this is recorded and they'll send it out. In your book, there's if you scan this barcode and you put your information on there, we can send you this presentation and then we'll get you on our newsletter. And then we do info sessions. We do them every quarter. So our next one is October 25th, so you can sign up for that also, and we'll go similar to these slides. And then just depends on where we're talking about. We're talking about the Home in 5 down payment assistance, or in Pima County, a new program just launched. So, we go out and just talk about all the different products.
Patty, there's a quick question in the chat. Was there an annual fee mentioned that the borrower pays every year for this program?
Correct. So there's a $100 renewal fee if they benefit from the program. So they don't start paying that $100 till they see the $2,000 benefit. So every January, we send them, here's the tax form. This is how you claim it. Go file your tax returns. And once you filed your tax returns, there's a $100 renewal fee. Now, remember, if they don't use the program, they don't claim the credit, their credit can be rolled over, but they don't pay the renewal fee. Okay, the only time they're going to pay that $100 fee is if they see the credit on their actual tax return. And if they were not able to benefit, or if they did not file, we waive it for that particular year. And then we'll reach out to them again the following January.
How's that fee paid?
They can write us a check. They can pay online on our website. So we bill them in January. It's due March, typically April, after, because we give them a chance to file their tax return. And it's not something that like, I have to have it now before you go even try to do your taxes. It's like, here's the tax form, the 8396, here's the bill, here's all the instructions. Or if not, we do the free tax preparation, and then you can pay that once you have benefit. Okay, 2 hands. I'll go in the back.
As far as dependents, what do you guys use to go off of that? You
We're-
go off of taxes or?
We usually, what's on the tax return, we'll ask your buyer. There's a section that says the income, and then on your channel 3, you guys list who the dependents are, and then we'll look at tax returns. But typically it's a family of 1 or 2 or 3 or more. We're not gonna, we don't get too involved.
Okay,
what
so
they-
the customer, more dependence on this. You guys would just bring.
So whatever they say, yeah.
Michael Chalker, Service First. I've been
Thank you.
talking to you guys recently. So if I have a mom and a son purchasing a house together, the MCC, the credit can go to either. Can they swap it 1 year, mom uses it, 1 year, son uses it?
So what we've been doing is if the certificate's in both names
Mhm.
and that interest paid is in both names,
Mhm.
it's whoever's gonna put that, gonna claim the interest on their tax returns. We've had it go as far as they
Could
split it.
That was
Yeah.
gonna be a subsequent
And,
question.
and that's might be a headache for the tax preparer, or they're not even gonna know what they're talking about anyway.
Mhm.
But the ones that does the tax returns for us, they actually split it. So they split the interest on the 1098 and then they split the credit.
Okay, and then a subsequent question that, what happens if later on in life they decide to depart that residence and make it a rental property and move into something different? Do they still get that certificate every year mailed to them?
Yeah,
because
it's still
not
gonna go
owner
out.
occupied?
Yeah, it's supposed to be their primary residence and every January it goes to that house.
So,
So as soon
so
as
if
they-
it- as soon as that's not their primary residence, then that kind of rolls off.
Correct, especially if they're filing tax returns at a different address. Yeah, so, or even back to that question with splitting it,
Mhm.
our, our tax preparer, or even depending on the tax preparer, we're familiar with this person would get more benefit out of using it.
Mhm.
And we can have that conversation with them.
That's what I was speculating. with
Yeah,
the-
yeah, so we
the-
can do that, but a lot of people try to stay away because they shouldn't be advising on those kinds
Sure,
of things, but we
sure.
let them, we'll show them, just like we just showed you guys on that tax return, this is why this person is gonna benefit more than this person.
You said this was in 5 states. What other states?
Yeah, we just got a question on Texas. I think Eugene, you might know, for sure Denver, and, I'm sorry, Nevada. Nevada does it, Texas does it. But there's, I can't remember them right now. Eugene had looked into it for us, all of the different states. But usually you can Google mortgage credit certificate and it'll tell you which county in particular is offering it. See something up there, Nisa.
The initial fee. He was asking about the
Yep.
initial fee, the 500.
Okay, yeah, so there is a fee, there's a fee to get into the program. Now, there's a one-time $500 program fee. Now, if the lender's using it to qualify, they typically will put it on the CD and it can be collected at closing. So if the seller's paying concessions, if you got down payment assistance, that can be paid at closing because we can issue an invoice with that approval letter. Now, if it's not being used to qualify or not involved in your guys' loan and you guys just say, hey, go learn about this program, we work with your home buyer. And typically, once they've moved in, we let them make payments. So right now, we're getting closer to the end. They just have to pay it by the end of the year so that they can start filing their taxes in January. But if they jump in June or if they close by June, they can do $50 a month. It's not something that we have to have now. They can make their payments online just until they get to December, as long as it's paid off. So we can issue that certificate so they can start using it in January. Hey. Any other questions?
I think that I trust you guys are pretty amazing. We've had some deals that are just blowing up, they're not gonna work. And, LOs will call you or email, and you guys whip out those applications,
Yeah.
certificates, people close on time, people are happy, but everybody on your team is real responsive. Sometimes we'll just email just scenario questions and we get an answer back immediately, so.
Yeah, appreciate that. Thank you. Yeah, and thanks again, Marie, for having us. This is like the first in person, I think, since COVID, it seems like. So,
North Carolina, Virginia, and Texas.
okay.
Yeah, it is a valuable tool for you, but it is really valuable to that home buyer, just qualifying or not qualifying. We can get qualifying for this house instead, anything like that. And besides qualifying, actually making it affordable. So, just another $160 a month for them, might let them breathe. We just got you qualified through DU. You're there, but not yet, but they're not comfortable really with it, that seems like a lot, but don't forget, $66 coming into you. So it's a great thing to be able to provide for your home buyers. You have any questions for me on a Home and Five or anything else for Patty?
I just wanted to add to Murray, it really allows home buyers to stay in their home. I just spoke to somebody that has a credit certificate, and he utilizes the payment towards his principal every year. And so it's been really helpful for him and his family. And it's been worth it. So I just wanted to share that information as well. Thank you.
Great. And one thing in the Home and Five program, we do provide an extra 1% for different home buyers. And one of those, we purposely use the term targeted areas because it crosses over into MCCs. It's a term that's been used for years in mortgage revenue bonds. And the targeted areas are the low and very low income census tracts throughout the area that we serve in Maricopa County, and for what they do with MCCs throughout the entire state. So that, those are 80% of area median income. Below that, on average in that census tract, or 50% for the very low. So if it's a targeted borrower for a Home and Five, it'd be a targeted borrower for MCC, and so you've got the little higher levels of qualifying for income and purchase price. And you showed up there, the purchase price in the non-targeted areas is now 560, 80,000, whatever.
Yeah.
And the median price now in Maricopa County is like 465, 470. So that's a lot of house they can get into, but the income is is really a bigger driver these days. If you can only have the program limit for the MCCs, not too many of those people are buying $550,000 homes.
I have a question. Were you gonna go over some of the Home and Five programs? I know I was a little bit late, but are you going over anything with just in general? I know you guys have some new openings on some well, actually it might just be a lender thing, but for example, I have a question in regards to, let's say the customer's a teacher. So you apply the additional 1.5 and then 1%, and then they're in a boost area, then it's half. So
Right.
we can layer those two together into whatever option
Yes.
sheet there is.
For our targeted borrowers, who comprise the I'll just call them military because it's veterans, active, all of that, and for K-12 teachers and for first responders, and there's a very specific definition in our guidelines, and for purchasers in targeted areas, they get 1%. Well, the thing is that with the targeted area, that's automatically eligible for another 0.5%, and they can get another 0.5% if they're buying in a low income census tract. Sorry, 1% is the limit without using the boost, and 1.5% is the limit if you use the boost. You should know, well, teacher and a first responder in the same household, they get 1%. So it's one or the other, and whichever makes better sense for you, if there's multiples of those, to document more easily, use that. Just make sure it's in the files, so when it goes through, it can be verified. But yeah, just add that in. If they're trying to get a 4% DPA and can get another 1% with one of our target borrowers, they get 5%, and that goes right straight to them at closing. Anything else, or is anybody else online in the chat who had a question?
I appreciate Murray having us out here and putting this out, because, the outreach was done to the Home and Five lenders and their lists, because we are trying to expand into Maricopa County, and we've been doing a lot with South Bank, and a couple presentations that I've done a few of them actually, PLC. So I'm glad you guys did come again. So they have heard from me, but those were on Zoom or Teams. So it's nice for people to come out and see you guys again and get to meet you in person. And we look forward to doing this more often, actually coming back. Maybe we're not as hot, but it's actually not bad today.